If you'll go back and look at some of my prior videos, at least over a year ago, you'll recognize that the way I invest has changed dramatically over the last year. And it's because I've learned how to access data that helps me make better investment decisions. I invest in companies that I believe are going to give me in excess of 30% return over the coming years. Now, Amazon I've owned for probably 20 years, and over the last 10 years, it's given me a 35% average return year over year, and I think it's going to continue to give that. But I go about it a different way now. I don't just rely on other people's opinions of what is happening. I basically bring the numbers down to where they tell me what they think their earnings per share are going to be next quarter, next year, next 3 years from now, and then I analyze their performance in the past and say, based on that information, what is their price of their stock going to be at the end of 2024, 25, 26, and 27, and then I make my investment decisions accordingly. And right now, I believe is a buying opportunity on Amazon because I want to add to my position because I think they will continue to give me a 35, 36% annualized return because of their adoption and to that of artificial intelligence. I think they've got a good handle on it. I think they know how to use it to improve my buying. I also was influenced by the fact that over the last week, we've gotten 3 deliveries from Amazon. And the fact that I've gone by their distribution centers, I've even gone into one of their 1-hour distribution centers, and they're very robotic. So I see a company who is going to grow. It's going to keep up with inflation. In fact, it's going to stay ahead of inflation, and it's going to reduce its costs, thus increasing its operating margin. So what I want to do in this video is support why I'm buying more Amazon this week, and then I will use technical analysis to determine at what price. Up until today, it was running below its 50-day moving average, and I thought it would go another couple clicks down. I still believe it might, so I've got a price that I want to buy it at, and I will just add to my position and hold about 3% of my portfolio in Amazon. Let me show you exactly how I do this. This is the same analysis I showed you yesterday relative to NVIDIA, but this time I'm trying to buy Amazon because I think Amazon's going to give me a good return, not only over the next 3 years, but probably the next 10 years. And again, I'll just go over what I do. I create a history going back to 2009 of their earnings per share, their price, and their revenue. And as you can see, it goes across here, and I'm showing earnings per share as it grows and goes down on Amazon. And then this is the percentage movement. As you can see, they had an earnings per share here of $1.15. It went up to $2.09. That's an increase of 81%. I then take and get the averages of all of these numbers, and the average movement of earnings per share is 54% per year. I then compare that to the average movement in their stock price. That's this number here. This year it was up 16%, then up 34, down 4, up 45. And so its average is 40% going back to 2009. I then build a relationship between the movements in earnings per share and the movements of stock price. And what this tells me is that for every 54% that the earnings per share goes up, the price of the stock will go up 40%. So that is a 70% relationship. Now then, what this is their average PE ratio of 49. I then compare that to the price of the stock on January the 2nd of 2024 and its movements against its anticipated earnings per share and a PE ratio. And so using my algorithm, I predict that the price of the stock for Amazon this year will go from $49.93 per share to $250.71. Today, it's right now at 182.02. So I'm predicting between now and the end of the year, it's going to go up some $70. I then take that same logic, and again, now we're talking about the numbers that Amazon releases to me and tells me that in 2025 our earnings per share are going to be $5.70, in 2026 $7.39, and in 2027 $8.80. I then plug that into my algorithm, and it tells me that based on past history and current projections, the price of Amazon is going to be $321.11 on December the 31st, 2025, and then $397.16 on December 31st, 2026. So based on this information, between now and December 31st, 2026, I'm going to have an increase in price of Amazon by 118.19%. Now, what I have to do is say, okay, based on that information, how much of my portfolio do I want allocated into Amazon relative to the performance that I have seen or I am projecting I'm going to get from every other stock? So what you're seeing is I want to allocate 2% of my portfolio to Amazon, and at the current price, that's $19,235, which now says I currently have about 50 shares, but I need to buy another 21. And that's how I manage my portfolio with every stock that I own. And because it's okay, I'm going to get an increase in Amazon of 118%. But if you watched yesterday, you know I'm going to get a substantially greater increase from NVIDIA. So I will allocate my portfolio accordingly. You also know that I have some moonshots, if you've watched my videos even further, that I'm anticipating I got some stocks that I'm going to get an 800% return based on this similar analysis. That's how I analyze stocks. That's how I'm able to predict with some confidence as to what is the price going to be a year and a half, 2.5 years from now. Then what I do on my cheat sheet is I compare that to what the Wall Street analysts are saying they think the price is going to be. I then go and search and find what Zacks believes the fair value of the stock is, and I come up with 3 different numbers as to what I believe the stock from my analysis, what Wall Street believes the stock is going to be from their analysis, and what the fair value based on the financials the stock is. Then I take it to my TradingView spreadsheets and I plug in technical analysis. And what I'm really looking for there is what the price right now is 182.10. Okay, what do I want to buy it at? And it's a little bit less than that this week based on the technical analysis, based on the movements of the stock over the last 30 days, the last 60 days, and the last 3 days. Where do I want to buy Amazon? Can I get it for 170? Can I get it for 152? That's what I use technical analysis for. That's how I manage my portfolio. It's all in my cheat sheet. It's all broken down so that if you want to take from my knowledge, it's there for you, okay? Or just go and subscribe to, I use Seeking Alpha, I use Zacks, I use TradingViews, and I use a few gurus that I have gained access to help me determine what stocks do I want to own, what price do I want to buy them for, and what do I believe they're going to be worth 2.5 years from now. So how much of my invested assets, of my investable assets, do I want in each of those stocks to minimize my risk and maximize my return? That's what it's all about. It's all about taking what you can gather from the data and putting it to work for you. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I'm here to help you understand the stock market so you can maximize the return on your investable assets. If you want to do this yourself, just build your own Excel spreadsheets. If you want my help doing it, if you want access to my work, just get on the bus.